Disclaimer: this is not financial advice. Always do your own due diligence before putting your money to work. With that out of the way, let's have some fun and enjoy the episode. What's good, y'all? Welcome back to another episode of the Rich Off Games podcast. This is episode 39. Hope y'all had a happy weekend. Hope y'all had a great Money Mondays just to start the week. Without further ado, let's get right to it. Man, what an eventful weekend. Shout out Tom Holland, shout out Zendaya, shout out Spiderman, the whole franchise. It was a great movie. Lots of memorable moments. And that's really one of my most favorite characters and superheroes is Spider-Man. I grew up watching Spider-Man. I grew up wanting to be Spider-Man. I grew up, wearing the costumes and all that. A lot of people showed up. And this is probably the best version of Spider-Man. And I know I'm talking about Spider-Man a lot. This is an investment podcast. And the reason why I'm talking about this is because of the numbers that it did this weekend. Over $900 million made in the box office. Opening day, over $300 million in one day. Just think about that. $300 million made in one day off of a movie that's a fictional character. $300 million from an idea, something that was not even a reality ever. This is not even based off of true events, based off anything that's in our real world of activities and things that take place. This is just a fictional story about a character who's a superhero who shoots webs. And it made $300 million in one day. Saying that to say, your ideas are only as far as your limitations. The way you think and around the idea, the thing you want is possible is based upon what you limit yourself to being capable of doing or limit yourself from being capable of pursuing. So if you limit yourself to being only capable of pursuing only a certain amount of attention, you're only going to get that amount of attention. If you limit yourself to networking and connecting with a certain amount of people, you're only going to get the networking relationships and connections to that certain amount of people. You're not going to get the network or the connections or the relationships with the people who can put you in a position to win big. It's all based upon your ideology and your belief around the thing that you want and how big you want it to become. Shout out Tom Holland, shout out Spider-Man. That was a beautiful display of the character Spider-Man. And I think that's probably one of the better, I'm just going to say this, Tom Holland is the best version of Spider-Man that we've gotten. And I know that's a very argumentative thing to say. Tobey Maguire, shout out to you. You paved the way. You set the foundation for the character Spider-Man live action movies. And you did what you were supposed to at the time that you did what you did and you were supposed to do. You did everything right. But this Spider-Man is just, like, Tom Holland is a great actor. The support behind it, of course, the technological advancements with AI and just technology and production has increased and provided better opportunity for better display of characters to come to life. And so I think it's a mixture of those things, but just the core acting in itself, Tom Holland did really well in displaying that. And I feel like he really embodies what a Spider-Man character needs to be. The selflessness, the positivity, the mistakes, the human part of it, and then the superhero part of it as well. Like, not to spoil the movie, but just to kind of display who the character Spider-Man is. He related to the people while dealing with the things that he had to deal with as Spider-Man. And so just the delivery of that story was really well delivered. And so I really, really enjoyed the movie. And I definitely would go watch it again. Probably will watch it again before it goes to Disney Plus and all those other things. But that just goes to show you how important it is to pick the right people to be in the right positions. Because had it been any other character, like you see this time and time again with DC Universe. And I'm not too much of a big fan of DC Universe, so I can't speak too much on it. But picking the right people to be in the right positions when it comes to playing important roles or characters is pivotal, because even in business, you have to pick the right team behind the idea that you want to create for it to be able to thrive and work at a high level. So if you're trying to put a gardener in a accounting position, it's not going to work out. If you try to put a plumber in a sales position, it's not going to work out unless that person is qualified or has enough experience to be advanced in sales. If you want to master at something, you have to pick and you have to go look and find where the mastery people are. You can't just pick somebody out the crowd and think that, oh, this is the perfect person for my business idea, for my team that I need him to be on. No, that's not how it works. They don't just pick a person out the crowd. It's real deep thought that goes into picking the right person. You have to be very analytical. You have to really study this person. You have to understand what their good things are, what their bad things are, what things they're good at, what things they're bad at. What sets this person apart from the other person that you're not picking, and vice versa. What doesn't set this person apart from the other person that you're thinking about picking. You know what I'm saying? You have to really, really, really give deep thought to the people you choose to put in a certain position to win in your business. So keep that in mind. Very good movie. If you haven't watched it, I definitely recommend go watching it. It's a good family movie, good movie to go watch with your significant other, and just a well-rounded movie, man. This is crazy to see that movie come out the way it did. But no more of that. Let's talk about the market, what took place today in the market. So the market had a little bit of a gap up today. The market pushed up higher, and it saw some strength going into the start of this week. Seeing a strength come in from a lot of tech companies, Microsoft software seeing a little bit of love today. My memory seeing a lot of love today. A lot of companies had a very strong push higher in the market today. I believe that was also due to Trump announcing them not striking on Iran once again, and them having negotiations and talks. Same old, run around with the Trump administration around that. But nonetheless, we did see a lot of software, specifically Microsoft, which is one of the names that I've been advocating and pushing all year long after seeing its strong decline that it's had this year and just getting beat down time after time after time again. Memory having such a strong run, semiconductors having such a strong run, CPUs having such a strong run, and software not getting enough love. Microsoft being the main one. It had earnings last week, and it blew earnings out the water. And not only did it blow out earnings out the water, it definitely had a lot of love and money flow in since then. We're currently sitting at 488 in the market, and post-market is sitting at 45, so it's seeing a little bit of sell, but it's been running up since then. And prior to earnings, it was sitting at 390. So already a $90 increase from where it was previously sitting at. And it was there for months. It was there from 350 it ran up to 450 at one point, then it ran back down to 390, 380, 360. And, since then it's now seeing another run up. Can it continue is the question. I think that it can. I think it still has a lot more room to run. This is the first day that its year to date has turned green. So it's only year to date up only like 1%, barely 1%. So it could see a little bit of a pullback here. If it does pull back, I do think it's a buying opportunity. So I would say get in some position in and use a stop loss of the previous demand level, depending upon where it pulls back to. If it comes down to honestly, if it reverses, I can't even say, because now that it's at 480, I would think 450 would be that next level of demand. If it fails there, then it can see low 400s. I really don't want it to do that. I really want it to hold this level at 450 and continue. So I would look to take, some trims if it fails 450 and look to get re-entry around low 400s if it does have a pullback of that magnitude. But I preferably would like it to hold this 450 level, continue to go higher, and break above 500 to now push into possible new all-time highs. My targets for Microsoft is like above 550, going back into like 600 plus. Preferably. So that would be my ideal idea around Microsoft, is to hold for the long term and see it push higher. Now, outside of that would be the only thing that I would recommend you guys doing. There were a lot of pullbacks in Micron. There were a lot of pullbacks in memory, Micron, SanDisk. SK Hynix has also gone public on the U.S. stock market. And, there was a lot of buying opportunity going into the late July and early August. Is this the time to be looking to buy more, or is this a time to be looking to sell? I think the selling period already happened in mid-July going into late July, like I mentioned. And I don't think this is a time to be looking to sell. I think this is a time to be looking to buy. Put your buyer cap on, get in the market, look for good discounted prices on companies that have been running up, and buy those companies. What companies should you be looking to buy? The memory story has not finished. It's still holding strong. It's still true to what it is and the demand around it. So Micron is still a name that I think is worth mentioning. Semiconductor wise, CPUs, I think AMD has been seeing a little bit of a pullback. I definitely believe that they're another company worth mentioning. They've been having some pretty significant pullbacks. So I think that those companies are worth looking at buying. NVIDIA has not seen a lot of love, and I don't think it's at horrible prices to not buy. Now, 190 was the better prices. We did see low 190s. Like I said, last week, the week before last, we were seeing 190 being tested and it holding that level. So I do think 190 was not a bad price to buy it at. If it comes lower, I think that's even better. But 190 seems to be that bottoming out price, 20% down from highs around 240 to 250. So I definitely think that NVIDIA is a company worth buying and just holding for the long term. Even if it doesn't grow and it's not a growth stock and grows in value, it's a good, sound investment because of the performance of the company and the value of what the company has and is. So NVIDIA is always a good investment. Apple, it had a little bit of a pullback after earnings. It's back at 300. I don't think that's a horrible price. It's 10% down from where all-time highs was. I would prefer Apple to come down around the same prices as NVIDIA. Well, same percentages as NVIDIA. Come down more than 20% for me to be interested in buying. And then I would look to get in it. But at 10%, it's not a horrible buy. It's not a great buy. It's just something to buy if you were looking to have somewhere to place cash. It's not a horrible buy. It's a sound company, has great performance, great cash on hand and cash flow. And, it pays, I believe Apple pays a dividend as well. So Apple is not a horrible stock to invest in if you guys were looking to park some money somewhere. But those would be the companies I would say buy. Now, August is also known as a weaker month in the market leading into September. September is known to be the weakest month in the year for stock market performance. So August is something to just tread with caution. Be cautious of your plays, be cautious of your investments, be cautious of where you're getting in at. If you do decide to buy any stocks this month, this is just a month to be aware of possible downside. Given the start to the month that we've had, we could see some upside, but I think that we're just possibly going to retrace, at least for Qs. I think SPY can break all-time highs this month, but I think the Qs can see some retests of previous all-time highs. We had a correction for Qs, which was needed. The semiconductors and my memory sector had correction, which corrected the Qs movement because it was in a very volatile state and very, very aggressive move up. Now that we have settled down with those two sectors, I believe that it kind of rebalanced a little bit and can see some push, some movement upward, but I think we can also see some, pushback and some sell-offs here and there throughout the month of August, and then leading into September, we can possibly see more selling pressure come into the month of August. With that being said, let's talk about the investment tip of the week. If you guys want more tips and tricks about day trading and investing, make sure to click the link in the bio, www.continuebelief.com. I share a lot of free resources and tools, tips and tricks about how to day trade, how to get started investing, and so much more. So make sure you guys check out the link in the bio. Thank you guys so much. Make sure to leave a like and follow. And yeah, see you guys later. So I've been doing some research and listening into a lot of great CEOs. One CEO I've been listening to a lot of has been Sam Altman. And I also read an article on Sam Altman and his portfolio, his wealth. Now, he doesn't have direct ownership of OpenAI, and I'll explain that here in a little bit, but he does have a $3 billion portfolio. He makes $76,000 annually from OpenAI as the CEO. So he has a salary of $76,000. Doesn't make money from shares directly to OpenAI. He owns a part of a OpenAI foundation or a nonprofit that was initially, because OpenAI was initially set to be a nonprofit. So he's a founder and he has ownership of that industry or that company. And so he has ownership of OpenAI as the brand through that, but he doesn't have direct ownership as the CEO, individual, shares. How he got his wealth was from investing in private companies in the Silicon Valley. Being in the Silicon Valley, he was there for over 20 years. He worked with numerous individuals, but two of the individuals that he mentioned, one being his mentor who owned a company called Y Combinator, and then the other person being Peter Thiel. Peter Thiel is an early investor in Facebook. He invested into PayPal. He invested into a lot of different companies. Look him up. He's a great investor. $12 billion, $28 billion investor. And the investment advice that he gave to Sam Altman was not to invest into the most popular thing. Investing in the sound things, the things that don't seem as exciting but very much needed. So saying that to say, apply that principles. Invest in the things that are not the most popular or not the most sought after or not the most talked about, yet very important to the economy, very important to the world and what the world has going on. Memory being an example, memory was not talked about earlier this year. Memory was not talked about midway last year. There was talks, but there wasn't a lot of talk. You have to put your ear to where there's not a lot of noise and really pay attention. Because had I paid attention, or anybody who was investing paid attention, more attention to the companies that are making noise in the background, those would have been the winners. Just like Microsoft. Microsoft was the attention. Microsoft was not getting the attention. Microsoft was being overlooked. Microsoft was being, undervalued and disrespected all around because of memory, because of semiconductors, because there was a lot of other eyes on other companies that people wanted to invest in because of what people are seeing and how they're seeing the returns and the growth and all these things happening in real time, and they're not seeing Microsoft see any results or any growth or anything. So of course people are going to shift their direction and shift attention to the thing that's working and the thing that's making a lot of money, but they're not going to put their attention or their money on the thing that's not. So you got to be in a position to not bet against the crowd, but bet with them just in a different way. Finding the things that people are not on game about, people are not aware of. Allowing yourself to capitalize on something greater because you're earlier to the party, and that allows you to now enjoy more drinks, get more engagement, and get more results on the back end. So invest in the things that aren't as noisy but still valuable. That's the investment tip. Let's talk about the top performers of the week going into this new week. So last week's top performers and the weak performers of last week. Starting out with top performers. Consumer discretionary ticker symbol XLY seeing a 6.1% return. Top movers, Amazon having a very dominant earnings report, being the main thing that carried this sector up 6%. Amazon did move really well, and I believe it would move well as well today, seeing a 4% move in the market today, reaching closer to all-time highs, I believe. up 24% year to date, which is really good. Second up, we have communication services, ticker symbol XLC. Alphabet had a pretty strong earnings report. Meta had a pretty strong earnings report. Well, it initially sold off, then it bounced after going into today as well. One of the bigger names that had a strong move, and Google also being another name that had a pretty strong move. As for number 3, we have financials, ticker symbol XLF, seeing a 1.1% return. Top movers, large banks mainly being JP Morgan, Goldman Sachs, and Bank of America, all seeing pretty good moves in the markets. So yeah, Hood had earnings last week, didn't really do too much, came down a little bit, and I think it is still worth buying. So if you guys are looking to buy, I definitely recommend buying Hood. Let's take a look here at the worst performers. For the worst performers of the week, last week, we have utilities, ticker symbol XLU, starting off, seeing a negative 4.2% return in the market last week. Very sensitive sector, got hit the hardest by a sharp rise in long-term treasury yields. And essentially, it just had a lot of AI names that sold off in the market last week. The stocks being Vistra, ticker symbol VST, Constellation Energy, CEG, and NRG Energy, all seeing a drop in the market, which affected that sector. Secondly, real estate, ticker symbol XLRE, seeing a negative 1.9% return. Same story as the utilities, seeing a long-term yield rise. Some of the worst stocks didn't really have a lot of names. They just, overall, the whole sector had pretty poor performance, but similar story to the utilities. Lastly, we have materials XLB, seeing a negative 1.6% return. All really seeing negative impact due to treasury yields being raised, capital rotation from materials going into software, so Microsoft, Amazon, Google, all being names that impacted this sector. And just, that's really it. Overall, the overall materials market just had poor performance due to rotation. So those are your top performers and your worst performers. Definitely keep an eye out for utilities, Vistra Energy being one name that is one to watch. There was a story last week that took place around a guy, or a firm, I should say, a hedge fund that got liquidated. And it got liquidated because it was essentially over leveraged. This is something that a lot of investors who are new need to keep in mind as an investor. You never, ever, ever want to over leverage. Get called on margin. Getting called on margin is probably the worst feeling ever, because you liquidate yourself from making poor decisions. If you treat the market like a casino, if you gamble with your money, it will go away. This guy was close to losing everything, but he got bailed out by Citadel. Citadel bailed him out, and he was able to walk away with the money he made this year, because he was up over 400%. But when he leveraged everything for tech, because tech was pulling back and memory companies and semiconductor companies were pulling back, he leveraged a lot. And so he was very over leveraged, and he almost got a margin call on him. But Citadel ended up buying out his ownership of the position, and Citadel ended up getting a return on that investment. But nonetheless, that's just a story I'm telling you guys that story so you guys are aware of these things that happen in the market, and how this game can manipulate you and put you in a position to lose. Because everything's public, everything's public information. So especially if you're investing in public markets, people are gonna notice that, and they're gonna try to take advantage of it and find a way to make you lose, especially if you're winning a lot. Because he was winning a lot, and he won big this year. He went crazy with Micron and a lot of memory companies. He saw a 400% return on his investments this year. So he was up big. And had he took an L on that and didn't get bailed out, would have wiped all his gains and probably went in debt. So just keep that in mind, that you never want to over leverage, even if you're very confident. You know, to an extent, you don't, if there's risk that you don't mind taking, fine, do it. But don't risk everything at one time. That's just unnecessary. And it's very, 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 very dumb for you to do that. So yeah, food for thought. I don't remember the guy's name. Let me look him up. He was considered to be like the next Warren Buffett. And that definitely put a burn on his name, on his image. But I don't think that really affects somebody. I mean, that's just another L in the game. You're a lesson lost, a lesson learned, because you do that. Now you make a mistake. Okay, you're still credited as a good investor just because you made that one mistake. Yeah, it was risky as hell, but you took the risk. So you're willing to take the risk. That's what that tells me. You're smart because you made the money, and you walked away. You walked away without having to really pay for anything. I'm not seeing his name here, but let's see. Okay, Leopold something. Situational awareness. Look it up. Situational awareness, Leopold. That's the guy's name. He was liquidated for $45 billion. Started with like 200 million, turned that 200 million to like 45 billion, and he almost lost all of it in one swoop. Oh, he did take the L. So he did take the L. So he went from 45 billion down to 10 billion. He lost 35 billion just like that from getting liquidated and Citadel buying out his position that he took for the multiplication leveraged asset purchase. Don't leverage your assets, y'all. Unless, not even unless, just don't do it. Just don't do it. Even the biggest investors are getting liquidated. So it just doesn't make sense to do that. Why would you do that to yourself? Just play the slow and steady game, stack your wins, compound the investments, and let them grow. And that's it. It's really not that hard. But with that being said, y'all, this will conclude episode 39. Hope y'all enjoyed this, y'all. Make sure to leave a like, comment, show some love and support however you can. I appreciate you all for tuning in. Make sure to go see Spider-Man. I'm not advertising for it, but I am advocating for it. It is a very good movie. I appreciate you all for tuning in. I'll see y'all next week.